Good morning. I'm Vince Lanci. This is the market rundown. Thursday, the day after Fed Day, and we're going to discuss what happened yesterday, what is likely to happen going forward, and some observations on markets themselves. The title is tentatively We Have Liftoff, and that refers to everything: gold, inflation, stocks, bond yields, everything. Oh, silver especially. And we'll get into the reasons why silver especially. I think it's silver's turn. It really might be silver's turn to catch up and overtake gold. That gold-silver ratio could be collapsing now. Okay, enough of those opinions for the moment. Let's take a look at the markets first. The dollar is down 25 at 100 spot 67. 10-year yields are 371 unchanged bid after rising yesterday, despite the Fed cut. Love to see that. S&P 500 is 57.14, up 87. The VIX is 1669, down a penny and a half, 1.5 vols. Gold is 25.87, up 28, near the highs, but not on the highs. SAXAG, I want to say Silver AG. Silver is 31.16, up $1.09. That's 3.6%, a whopping 3.6%. And copper is 4.32, up 8 cents, a whopping 2%. Silver is the Goldilocks metal. It's precious and it's industrial. And when the world is buying gold and the Fed is lowering rates, you don't want to be short silver. All right, moving on. Gold, silver, significantly weaker. I think this is the big one. Call Michael Oliver. WTI 71.85, up $1.43. Beautiful. You want to see that if you have an inflation theory. Natural gas 223, down 3 cents. Bitcoin up 809, 62,549. Also breaking out. Ethereum 2432, up 57. Palladium up 42 at 1098. Platinum 988, up 17. Wow, platinum is really just being left in the dust by palladium now. Soybeans down 6 cents. Corn down 2 cents. Wheat down 8 cents. 1023, 398, 572. Maybe Powell is lowering rates and printing corn now as well. It's hard to say. Okay, humor aside, let's get to the meat of this. Yesterday we put out 5 posts. We're sorry for the deluge, but we're not sorry for the information. It was almost real-time posting yesterday for us. There was just a lot of stuff coming out. Okay, so homepage. Dear Zoltan, we still need a vol moment 30 months later. That post was written at 10:53, and it's still correct. Volcker, listen to me. Powell capitulated. We will not get the vol moment we need to make these markets more healthy. He chose inflation. If you're long gold, he chose wisely for you. Fed Day, 25 versus 50 basis points. Bullshit aside, that was my comment yesterday. The hopes for 25 basis points as a reasonable person and the expectations that a 50 basis point thing could be probable and not pretending to predict it. News, UBS, Russia, Enbridge, tax abolition. There are 4 other posts. We're going to touch on those in a second. All right. He chose inflation. Quick comment. Inflation is not dead. It is the lesser evil for Powell now, whether he sees something he doesn't like or is just playing by his own data-based rule book. It doesn't matter. Inflation is the lesser evil. As long as domestic and global markets respond properly, he will do that. Stagflation is the bigger evil. Recession is not an option. Summarizing this more cohesively, Powell chose to look at the current inflation data, which clearly shows a path to 2% is almost metaphysically certain. He chose to ignore labor wages, labor pressures, which are increasing again. He focused on unemployment as the reason for lowering, yet said unemployment wasn't a problem. Oh, what else did he do? Oh, he completely ignored the housing problem. Houses are at like near all-time highs, and rent inflation is not going away, even though they say it's in the pipeline. And well, he's willfully ignoring future inflation for current inflation. It's a guy who's running out the clock, in my opinion. There's the Fed chart. All right. There's Fed, here's the Fed hiking regime, and here's them dropping 50 basis points. All kinds of global implications for this. Actually, let's do that now. Jumping around a little bit, I want to show you something. In looking for my silver explanation, I want silver to rally more than gold. And I think one of the signs that it would rally more than gold would be how emerging market stock behavior perks up relative to a Fed cut. So to put it in human terms, silver is like an emerging market. When the Fed lowers rates, people put their money into emerging market stocks because those countries are getting squeezed less by rates, and they put their money into silver at the same time. It's the same thing. And if you look at this chart, you can see that overseas markets, very quickly, I'll help you out with this. Overseas markets did very well. Nikkei up 2%. China up 69 basis points. UK up 1.1%, et cetera, et cetera, et cetera. The weekend, so this is good for silver, but the weekend was China. That's a monthly chart. But I think this puts more pressure on China to devalue a little bit. So bringing it back to silver, those things are signs that silver should be going up, and it is going up. And this bull flag is broken. This should not be it. Oh, what's the high? The high is 32.51. We should take out this high next week, if not this week. I'm pretty sure of that. Okay. Doesn't mean we can't drop a dollar before we get there, but you have to understand this is silver. Okay. Where was I? Back to the script, as if there was one. So he chose inflation. That's the first thing. The news. Yesterday, I put out a whopping 5 stories on the topics that were related to what's going on. Today, this will be the only email you get if you're getting the video post. There will be a PM email as well, but I won't send it. I'll have the intern send it so I can say that anyway. Breaking news, working backwards. Breaking news, Fed cuts 50 basis points, markets react in reverse. Markets all reacted as we thought they would, and then they all reversed very hard. That was profit taking, and you know that after the fact because how they're acting today. Dear Zoltan, we need a vol moment 30 months later. He predicted that Powell would let the market drop, and he's not. Fed day 25 versus 50 basis points, bullshit aside. We talked about that last minute. This is damn interesting. We sent this to founders. We'll share it with you topically. All the banks were 25, all the major banks were 25 basis points, except JP Morgan, they were 50 basis points. Even Goldman Sachs, which likes to be fluffy about things, was 25 basis points. Then, last minute, hours before, the night before, the head of trading at Goldman Sachs, in contrast to the chief economist, said he thinks 50 basis points. And so we shared that with founders. Now, there's no opinion about the markets there. We just think it's interesting when a bank head of trading disagrees with the chief economist. Okay. And then Hartnett's Global Fund Survey and Fed Day. Those things were related yesterday. We're going to be throwing together a chart package from that because it was very interesting. It's a survey that Hartnett does of the global fund managers that are clients of theirs. And there's a good relationship there. He's frank with them. They're frank with him. And he creates some data charts for us to appreciate from that. Okay, next, back to inflation. While Powell is telling us inflation is headed towards 2% on his data, the real-time inflation is getting baked in higher. So Amazon announced Wednesday, it is raising wages for its hourly warehouse workers by $1 an hour. Comes out to be like 6 or 9%. Sam's Club, earlier this month, workers are to receive a raise, higher starting wages, but still lag behind Costco. Sam's Club is owned by Costco. The big box giant said in a press release that it would increase employee pay between 3 and 6% starting November 2nd. Okay. Those are wages going up. They're not going to fire those people. People are going to get fired, but it's not people working in big box stores. It's not people working manual labor. It's people working in finance. So you're getting fired if you work at JP Morgan. You're getting fired if you work at an insurance company, right? And you're getting fired at all the small businesses that deal with them in the service side. But the employees that stay are getting higher wages. It's truly a replacement era as manifest in the whole services economy, not to be confused with services inflation, services economy getting whacked, right? And manufacturing getting its button, so to speak. And low employed people will get higher pay because Amazon wants to attract people that are competent, right? So anyway, inflation is baked in. All right, we'll talk more about that in premium. Let's do a little chart porn here, okay? All right. Let's do the hourly and remove the Bollinger Bands so you can see what we're trying to get at here. When markets digest news events, data, usually data. When markets digest known approaching news events, they have what we call the 3 R's. And subscribers know about this for years. The 3 R's are react, respond. I'm sorry, I'm forgetting that, right? React, reassess, reality. Okay, so react. Powell says he's going to cut 50 basis points. Silver rallies. Reassess. I'm not so sure it's really that good. Market sells off. Now, what's going on in these two candles? That's FOMO getting in, right? And that's profits being taken. Right? It's a big one, but it's profits being taken. And then usually over the next couple of hours, you see reality. And reality is, okay, the hot money got in, or the hot money here, short covering, covered, longs got out, and now you've got reality setting in and cooler heads are getting in. Well, reality's supposed to stop here, but it's still going and it's up here. This is reality now. So react higher. Reassess lower. Reality here. And those are the 3 R's, and every market had them yesterday. There's silver. Here's gold. By the way, see that peak there? We're back to the peak. Silver doesn't go back to the peak unless it's going to go higher. Gold. React, reassess, reality, right? Shorts covered, a lot of longs got out. Knife was caught again. Should have gone lower, frankly. And the market goes up to here, but still not on the highs. Stocks. Oh, classic. React, reassess, and reality is this is just, this is how it is when you're the U.S. Stock market. Copper. React, reassess. Look at that. Copper, right? All right. So back to silver. Why is it silver's turn? Well, silver has been, first of all, there are big shorts in silver. Silver has been shorted for various reasons. 2 of them are buyers of gold will sell silver to offset and lower margin costs, and also because they speculatively believe that central banks are buying gold, not silver, and therefore it's a good trade. Yes, it was a good trade a year ago. Comment aside. Second reason to short silver. Well, there are CTAs and smaller hedge funds that will short silver and copper in anticipation of economic problems. So they're long stocks, right? And they say, I don't want to sell my stocks out. And they sell silver and they sell copper in their CTA funds, and they get short as an economic hedge, rationalizing their positions. And when it works big, and it works over a long period of time. If you think back to what happened in February of 22 through August of 22, silver just kept dropping, even when gold wasn't dropping as much. And we had explosive rally, but that's another story. So that's why silver and copper get sold. So why is silver rallying? Well, you've got those shorts that are going to cover now. They're going to cover. And they don't care. The CTAs don't care. They're like, fine, just buy it, because they're making money in stocks. They'll take the loss, right? The other shorts that are covering with the gold thing, they're probably selling a little gold out, buying some silver, but they'll continue to drive this market. Now, the Fed is lowering rates, which means this will be a US driven rally, potentially. And that means you're going to see a lot more buying by US investors. And that means you're going to see more money come into silver, in my opinion. Because US actually has a decent investment cohort in silver, whereas other countries really don't show that. Outside of India and outside of, well, China doesn't invest in silver yet. That's what they say. The other thing is China. The US lowering rates, I believe, I really am not sure, but I'm pretty sure that this puts pressure on China. So the yuan, if the yuan were to stay unchanged and the dollar were to weaken, well, the yuan gets strong against the dollar, and it makes it harder for them to sell things. And that puts more pressure on them to devalue. So how can they devalue? Well, they can devalue by lowering rates. They can devalue by stimulus, which seems to be their chosen path going forward. I think what you're looking at, silver and copper, you're seeing people say, oh, China's next, China's next, which may or may not be true. But the reality of it is the world, remember the emerging market comment? The world is buying emerging market stocks on this, right? Interest rate pressures are no longer as big of a problem. And so the world will buy silver and gold also. Okay, stay with me now. I'll give you a little bit more about silver here. We'll do some predicting. I hate doing this, but what did I say yesterday? A couple days ago, I said we were, I think, here. I said, as long as we don't, I think I got stopped out if I was trading this, right? As long as we don't settle under here, I think even if we settled under here, well, we settled under both, right? So I would have gotten stopped out. This market is definitely going higher. Well, we settled under it. I got stopped out on the news item. Mentally, I didn't have a trade on for this. And now we're going higher. So this is the shakeout. The tree got shaken. Weak longs like myself, algorithmic longs, I would have been an algorithmic long in there, got stopped out, and now we can go up. This is, this pattern is really powerful for silver, not as powerful for gold. That's why I really, 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 really like silver now. I'll be doing something today, I think, to take advantage of it. Oh, here's the silver chart that I like. That says don't short it. Okay, you want to use your technical lines, your channels, but here we are above every freaking high. If this thing is above, spot 2670, 2680, and the candle is green, which it will be, the chances, anything above that, the chances of a moonshot really start to grow in silver. So stay with me and we'll do a little bit more detail on the whole Powell inflation capitulation thing. That's really what it is. It's inflation capitulation. All right. Here we go. All right, guys. 5:30 in the morning, I woke up and I looked at the markets and I went, holy shit, right? Pretty cool. And that's where the three R's came in. I'm like, we had the reaction and then we had the reassessment. I'm like, what's the reality? And the reality was it seemed like we were done. But a couple of things happened that made me think that wasn't the case. I didn't trade on it, but I should have. All right. So first of all, this is the news. These are the news items. Wait, that's not where we need to be. We did that already. That's it. All right. So Amazon announced, so wage pressure's higher. Wage pressure's higher, right? Here, I'll show you some charts on that. All right. Indeed, wage pressures are turning. So people are getting fired, but wage pressures are going up. And that's because the people that are working are getting paid more, right? You got a nation of immigrants coming in, untrained, unskilled, not even able to do grape picking, right? I mean, based on the behavior that we're seeing in the news, at least. Now, I don't mean to generalize, but I do mean to say that, it happens. Okay, so people are getting fired. Not low wage people, high wage people are getting fired. AI is going to replace operations people. It's going to replace low level lawyers. It's going to replace people like me, which is, petrifying. And there's the cut. We all know about that. Oh, here's what I want to show you. Someone from Hedgeye had this. Hedgeye USA is, I think, his account, right? So more on wage pressures, right? 6% of the workforce, I should make that bigger, but I can't right now. 6% of the workforce, union workers getting raises. 4% of the workforce, government workers getting wages. Not all necessarily union, but there you go. Job switchers, people who take jobs for new jobs, definitely on the decline. Okay, people are not switching jobs. I don't know that this is going to be a factor. He does, but he's just basically saying that people that switch jobs get paid more now. Now, do I think people are going to switch jobs more? Probably not. This is people getting first jobs and happy to get low-paying jobs with benefits, but the low-paying jobs are going up. Instead of getting Dunkin' Donuts, your Amazon employee is going to start getting Starbucks, or put it this way, Dunkin' is the new Starbucks. Okay, some comments. And Powell chose inflation over stagflation. Recession was never an option, as Posar said in 22. Posar said something in 22 that we wrote about, and we really were like, we didn't understand what he was saying. It was like, inflation, he said, recession is not an option. And it was the statement where he was talking about the volatility moment that I wrote about. And if recession is not an option, is what he said, actually. And I was like, oh, what the hell does that mean? Is it like a statement, I'm not going to let it happen? I think what he's saying is, what he was implicitly saying was, we choose inflation over recession. And nobody wants stagflation. All right. Powell in his conference cited current inflation data as without a doubt on a path to 2%. That's correct. He played down housing and rent inflation's persistence, the charts. Well, I don't have that chart there yet. He ignored wage pressures, see the charts. He stated, this is a cool one. I have to find the clip. He stated unemployment is not a problem due to immigration distorting the data. So the point is, unemployment goes up because new people are coming into the country. And so unemployment rate goes up even though more people are getting hired. So, this is not something new. Why is he talking about it now? Okay, I want to talk about this concept because no one is talking about it, but it's really important and it's a nuanced way of understanding his mindset. During COVID, he reacted to real-time data. People are getting fired today. So he lowered rates and did all this shit, right? And then when inflation picked up, he realized his error, or at least something to blame it on. And the error was, when you go with real-time data that comes out daily or weekly or even monthly, that's not big data, you run the risk of that data being noise. It's like looking at a 5-minute chart when you're trading a daily chart. But he reacted, right? He reacted. By the way, he was pressured to react. Now, since that moment, he started saying we're focused on the data. And by that, he meant the published data, which is always, all that data lags what's going on. All that data is the real-time data added up, divided by 4, boom. So GDP comes out after we see if people get fired. Unemployment comes out after. You could just do the math if you're a banker. And so he has gone from trusting the real-time data to sticking to the official data, GDP, unemployment. And in doing that, he did that to get inflation down. Now, he gave himself a hard target. It makes him look good. Inflation goes to 2%. The real data is going to, not the real data, the final data is going to confirm that, declares victory and moves on. Now he's ignoring the data in the pipeline. And the data in the pipeline isn't so much real-time noisy data, it's real-time permanent data. Okay, it's wages going up, it's rent cost. Rent costs don't go up and then next month go down. Your rent stays higher for forever until there's more housing. Okay, he's willfully ignoring inflation data that's going to bake in for years, if not a decade. And he's doing that because for him, unemployment is more important, which is kind of weird because he says unemployment is not a problem. Why did he cut 50 basis points? That's kind of a zero hedge comment. There's no crisis, and he's lowering 50 basis points. That's it. All right. Next part. Again, going back to Pozar. Something Pozar said, and I actually paid attention to, but I can't. It's a disaster. This is a disaster in the making. Here's what I mean. When the Fed fights inflation, there are two types of inflation, if you're not familiar. One type is goods inflation. The other type is services inflation. Goods inflation is the stuff you buy, food, right? Most of it is tied to energy, umbrellas from Costco, food, pistachios, whatever, things, physical things. And services inflation is mostly labor costs and housing costs. So it's not energy. It's how much is your rent, how much is your utility cost, not energy, right? How much is all the things associated with housing, broker's fees, shit like that. Okay. If you look at those two now I'm talking Pozar. If you look at those two inflations, right? Those two types of inflation, because the US makes nothing anymore, figuratively speaking, right? Goods inflation is out of the Fed's control. We can't get goods inflation down because people need to buy stuff. The Fed is supposed to be able to get services inflation down very handily, meaning by raising rates, right? He expected people to get fired, no one to get raises, all right? By raising rates, he expected houses to drop because mortgages would go up, right? By raising rates, he expected to squash or at least stop domestic inflation. So domestic inflation is services inflation. Goods inflation is foreign inflation coming in. That's where we stop with Pozar. He stopped talking about it. But what we saw over the next 2 fucking years was goods inflation dropped. Now, I know you don't feel with your food, but that's not my point for a second. And services inflation kept going up. Now, why did goods inflation drop? Goods inflation dropped. Your food prices didn't drop. The rate of goods inflation dropped because they started, my opinion, they started hammering the price of energy lower. Energy goes lower, the cost of goods. So gasoline is goods inflation, okay? Your gas prices went back down. So goods inflation is down and you feel good. But services inflation kept going back up. So the federal government is encouraging unions to go on strike. The federal government is hiring more employees. The federal government is bringing in immigrants that end up costing money to live, to survive. So the services inflation, which is supposed to be the domain of the Federal Reserve when they raise rates, they completely have lost control over. Completely is a strong word, but I kind of mean it. Goods inflation, which is not in their control. It is not under control. Just because it's under control does not mean it's in their control. It's the fiscal side doing all of this. All he did by raising rates on the goods side was make people say, I'm not going to buy a new Porsche. I think I'll go on a vacation. That's services inflation. I'm not going to buy a new car. I'm going to go on vacation in the US and visit Colorado and visit, the Grand Canyon or well, you get my point. Okay. So bringing it back to Zoltan, Zoltan said, uh, goods inflation is the problem. Service inflation will not be. Well, here we are 2 years later, and goods inflation is not the problem. I know food, I get it, right? But service inflation is going up. It's fucking ramping higher. He doesn't have control over inflation based on this, okay? And by the way, our economy retooling for manufacturing increases goods inflation. Why? Because you're like, I'm going to build a new data center. You go out and you buy goods, you buy copper, you buy cement, you buy steel. And those are raw materials. And those mean that the things that you buy that have them in them, not that you buy cement sandwiches and not that you buy, steel Coca-Cola, but those physical things go up in price. And so eventually energy goes up in price. And that means fertilizer goes up in price. And that means food goes up in price. This is a clusterfuck. Now, but this is not a doom conversation. They chose inflation over recession to avoid stagflation. They also strongly believe that AI and some cure for energy is going to bail us out down the road. And that may be true. But in the meantime, just know this. They're more comfortable with inflation than recession. And as a result, they're taking the lid off of silver and gold and even fucking oil. Guys, look at the hourly look at the hourly in oil yesterday, right? The hourly in oil yesterday was where's that? 2 o'clock. No, that's not it. Was it this? 11, 12, 1. Oh, here we go. It was this, right? So oil spikes higher on a small short covering rally and goes lower, right? This tells me they're not worried about inflation or goods inflation. And then this happens. This persists. You got goods inflation. Like I would just be long oil for buy season. Really. I mean, I'm already long gold, right? I'd be long oil and long silver for buy season. I would be. I'm not saying that you do that. Anyway, Vince, have a great day. That's it for today. Bye.